Let's move on to option two, a regional center investment. So, what is a regional center? A regional center is basically a private company. It's involved in the promotion of economic growth, job creation, and capital investment into the U.S. economy. So, generally speaking, a regional center is usually a private company. There's a lot of information on the internet where it might indicate otherwise that perhaps a regional center is um, a public-private company, or it could be a public-private partnership, uh, but it's generally not owned by a public entity or a governmental entity. So one has to be sort of cognizant of the fact that a regional center is really an economic entity, which is a private company that is involved in raising capital for EB5 projects. So how does an entity become a regional center? It does have to apply to the USCIS for regional center approval. It has to show the following things. How that particular regional center plans to focus on a specific geographical region within the United States, and how are they going to go about promoting economic growth in that region. And again, how in verifiable details, meaning they might have to submit business plans and economic reports and job creation models showing how a particular type of investment in a particular area will create and stimulate that local economy and create jobs. Sort of regional center investments that I spoke about earlier, large mixed-use development projects or commercial development projects or residential development projects, those do tend to create. Before we go into that, I do want to talk about one more point, which is actually a key point when it comes to regional center investments. Now, there's about 800 approved regional centers in the country, and any given day, those 800 regional centers in the country will likely have, I would say, about 600 odd EB5 projects in the market. No two projects tend to be the same. Each project carries its own degree of risk. There are low risk projects, there are medium risk projects, there are high risk projects, and how you classify them into one of those risk categories really through, taking into account a lot of factors that go into that particular project, and in terms of who the regional center is and whatnot. And I'll shortly go into those factors as well. Um, but most regional center projects that you'll see in the market tend to be low or no return. When I say low or no return, I'm really talking about perhaps a 1% return on investment, perhaps half a percent. Seen it up to 5 or 6% generally, but there are projects in the market that might promise or project 7 or 8% return. Just sort of remember the rule of thumb that I like to follow is, the higher the return is, the higher the risk may be. So you do have to be careful about that. But it's not to say that just because a project has low returns that it is low risk. That's not necessarily true. And hence, you should think about engaging professionals to help you make a fully informed decision when it comes to a regional center investment. So when we look at a regional center investment, what are the various factors that one should take into account? Or how does one go about selecting a regional center investment? One, I said you should definitely take advice from a financial or investment advisor, because you are putting at least $500,000 at risk, and perhaps if you're taking the $1 million route, then you're putting $1 million at risk for the next 5 to 6 years. So I always suggest to people that yes, you do need an immigration lawyer to help you on the legal side, but at the same time, you should take help from a financial person to help you make that decision, because there's a lot of things that they can look at in terms of the financial due diligence, the immigration due diligence, and the regulatory due diligence to help you really make a fully informed decision. So generally speaking, when one is looking at a regional center investment, these are the sorts of things that one should be looking at. The regional center team and track record. Say if it's a long-established regional center, then how many projects have they done? How many I-526 approvals have they had? How many I-829 approvals have they had? How many projects that they've actually that they've overseen has actually returned capital back to the investors? Now, again, that's not the only factor one should look at in terms of deciding what regional center investment they're going to put their $500,000 into. But it's one of the factors, because at the end of the day, it's really not the regional center that's returning the investors' money. It's the developer who's the borrower of that $500,000 along with funds from other investors that is going to be signing that loan agreement and saying, he or she will return, say $10 million or $20 million from 40 EB5 investors in 5 to 6 years. So yes, one should look at a regional center track record, but at the same time, it's really the developer or the borrower that one should be really be looking at and seeing whether they have the capacity to return that capital and how they're going to go about returning that capital when it comes due. And then what kind of projects has that developer done in the past? What kind of success rates have they had in the past? Have they done any other projects, through the AB5 program before or not? So those are some of the things that one should look at. Also, not to go too deep into this, but because you are a lender into that project, what is your position in relation to other lenders in that project? So say it's a $100 million project, perhaps 20 million came from the developer themselves, and perhaps there's a $50 million loan from a bank, and then the rest 30 million was raised through 60 EB5 investors. Now, obviously there's a bank there, so the bank might have first position in that loan, meaning if something were to go wrong in that project, then the bank would have the first right to foreclose into that project. Of course, this all depends on the terms of the loan, but they would be the ones who would be in a position to perhaps get some of their money back if there's enough collateral there. And if EB5 investors are in a second position, unless there's something left over, they're not going to get anything back. So that's another thing that EB5 investors should be looking at. And of course, financial viability of the project. Do a fair amount of financial analysis, or have your financial professional share with you the types of financial analysis that they've done, and what kind of risks that they've come across. The next is regulatory compliance. So in the U.S., there's two agencies that oversee a lot of capital raising activities. So one is the Securities and Exchange Commission, and one is FINRA, the Financial Industry Regulatory Authority. More and more, these two agencies are taking a very close look at the EB5 program. And there's quite a few regional centers in the country now that are actually embracing the fact that the SEC and FINRA are asking them to be compliant with securities laws of the U.S., and hence they're engaging securities broker-dealers in the U.S. To help them raise this kind of capital. And of course, there are regional centers in the country who don't think that they need to comply with SEC and FINRA because these are what they call exempt securities. Again, without going too much into the technicalities of what's an exempt security and what's not, because it really depends on who you ask. But nonetheless, again, as an investor, if you're risking $500,000 for the next 5 to 6 years, you want to make sure that the developer or the borrower or the regional center is in full compliance of all U.S. laws and not really operating in the gray areas of the law. Another sort of big factor that one should be looking at is the regional center's relationship with the developer or the borrower. More and more developers are rushing to become regional centers themselves. There is actually an inherent conflict with that. There are good developers and there are not so good developers in the market. So some investors are comfortable with that conflict, some are not, but that is another factor that you should be looking at. And of course, the job creation model for the project. At the end of the day, the reason that an investor is making that investment is so that they can get their temporary green card and then eventually get their permanent green card. And that's completely contingent upon the project creating the required number of jobs. So job creation model, analysis of that model is definitely necessary. There are what they call pre-approved projects in the market, and these are projects where the developer or the borrower and the regional center have submitted the documents, a business plan, the economic report to the U.S. government even before an investor has filed their I-526 on that project. And the US government has approved those projects, and in approving those projects, agreed that yes, the business plan makes sense. Yes, the job creation model makes sense. Again, they're not endorsing the projects or anything like that. They're just saying, yes, if all these things were to happen, in this particular geographic area, and you were to spend this amount of money, yes, we think this amount of jobs will be created. And the next is, again, the economist report is really related to the job creation model. The immigration compliant business plan is closely tied to the job creation model. So all of these things are things that one should be looking at when making a decision as to which particular regional center that they should be investing in.